About time for the top 10. And for the first one, we're going to China with Qihu, the owner of China's most used web browser. It's up about 6%. Reports say the company will approach 20% search market share in China by the end of the year. Qihu is gaining share faster than expected and looks to grab 30% share next year.
Number 9 is Urban Outfitters, up a fraction ahead of its second quarter results. Analysts surveyed by Bloomberg estimating a profit of 48 cents a share on revenues of $768 million. And of course, you should keep it here for those numbers, which will be coming to us after the closing bell.
Number 8 is Apache, dropping nearly 5% as Stifel cuts its rating on the oil and natural gas producer on exposure to Egypt. The firm lowering Apache to hold, saying that even though Apache's production in Egypt has not been disrupted, the risk of a disruption in the future cannot be ignored.
And a little problem with Cobalt today, down about 15%. The oil exploration company saying that it did not find commercially viable oil in one of its wells in the Gulf of Mexico. Cobalt says the results are disappointing. Yes, that would be correct. But that the company remains very excited about other prospects, no doubt, around the world.
Well, number 6 is Trulia, getting hit hard, falling about 7% after RBC cut the stock to sector from outperform. The firm cited a competitive environment in online real estate, potential integration challenges for Trulia's downgrade. And this, of course, after Zillow bought StreetEasy. Heating up.
Number 5, Saks. StreetEasy users shop there. It's down a fraction as the retailer's weak second quarter earnings raise concern that a slowdown in spending is reaching into affluent circles. Saks reporting its loss widened during the quarter, burdened by some higher expenses and charges. And I noticed Adam has been shopping more at Bloomingdale's lately.
Well, you know, I'm told, you know, step it up. And, you know, Blooming's is hot. You know, they got the, you know, the thin ties and, you know, everything is
Adam's modernizing his wardrobe.
There's nothing like the Saks shoe department, though, as Tom King will tell you, with its very own zip code. Saks store in Manhattan.
Come on.
I did find it interesting that they reported this loss actually before the buyout is set to close, that $2.9 billion acquisition.
Hudson Bay Company, largest retailer in Canada, buying Saks.
Yeah, that's set to close next month.
But no, your shoes are not going to be jeopardized. Your shoe
I hope
department.
not.
Oh, certainly
not.
not.
It was just sale time.
Okay.
Okay.
Edwards Group up more than 18% today. Sweden's Atlas Copco has agreed to buy the British vacuum pump maker for $1.2 billion in cash. The purchase is Atlas Copco's biggest in 14 years and follows 6 other takeovers this year. They have been busy.
All right, number 3, Dollar General rising 3%, biggest gain in the S&P 500. JPMorgan upgraded the stock to overweight from neutral, also raised its price target to $64 a share from $51. Firm citing signs that sales and profit margins are improving at Dollar General.
Number 2 is JPMorgan, down nearly 3% as it faces more regulatory trouble. According to the New York Times, U.S. regulators are looking into whether the bank hired the children of Chinese officials to help it boost its business in China. JPMorgan has not been accused, though, of any wrongdoing.
And let's talk about number 1 as we await the closing bell 30 seconds away. Intel. Up nearly 2%, rising the most in the Dow. There's not a lot that's up today in the Dow. Piper Jaffray raising its rating on the stock to neutral from underweight. The firm predicts the chip maker will snap out of its recent sales slump next year as more businesses buy desktops, laptops powered by Intel's processors. And there is the closing bell here on Wall Street. You can see that we are down about 0.5%. This is the 4th day of declines for the Dow Industrial Average. We have lost about 400 points in 4 sessions. It's been very difficult. That period of adjustment as we all try to figure out what it means. Central banks around the world cutting back on their bond buying.